Okay, folks, welcome to Market Wrap for Monday, the 28th, the final day of February. You could bet I will be going over some monthly charts tonight. The month is in the books, closed. So we're going to get some good insight as to how we closed out the month. And we are now nearing the end of Q1, if you could believe that, of 2022. So let's begin with trades we closed out today. PayPal, we took 100% of the trade off the table. Nice trade. We are now going to look to probably trade strangles. Let me check out the strikes here. Let's go to our probability analysis. We'll bring down PayPal. Okay. Yeah, 120 makes sense. 104 to the downside expiring this week. That looks like an interesting trade. Maybe we'll trade the weeklies expiring on the 4th or the 11th, one of the two. So expect to trade on PayPal, but using options this time, not the common stock. We want to sell options, not buy them. We want to generate cash flow. We also closed out Nugget today. Why? It was up on the session. I was sensing some weakness with all the bad news. Yet it just wasn't pumping up through that 60 mark. Gold was pulling back as well. We had a profit of over 60% on the naked put option. I decided it was best to close that out because when you get a risk off environment for gold, I should say risk on environment for equities, meaning the fear trade is no longer the sexy one. Gold, the miners, while we may be longer term bullish, get very, very bearish in the short term. So I'd like to be able to re-enter this trade. Remember, we sold at $59.34. We're looking to get back down in the high 40s, low 50s. So by closing out that options trade, we've freed up capital to be able to go in and buy the shares if they happen to dump them really hard. No guarantees there, but just a little bit of strategy. If they don't fall hard in the next day or two, well, what we'll do is we'll sell to open the 49 contracts, the put contracts going out and expiring the week of the 11th. Take note that Stokes are rolling over. The 10-year yield. Okay, so I may have mentioned this earlier, that while equities were looking okay, meaning the NASDAQ was consolidating, it came off its highs, went red, came off of its lows, and it looks like it wants to move up higher. We'll go over that chart in a moment. And it looks as though yields want to move lower. So I wasn't getting the warm and fuzzies the way that equities are looking. Not so much from an intraday basis or a daily basis, but more so from a weekly basis. We have the potential for a potential ceasefire. We have talks that appear to have gone well over in Europe between Russia and the Ukraine, and they committed to meeting again later in the week. Good stuff. So it makes sense for gold to sell off, a little bit of that fear trade come off, along with the US dollar. But you would have thought that bond yields would have risen with money coming out of bonds and into equities. That didn't happen. So I think I solved the mystery. I'm going to go over it in a moment. Before I do, TLT, money is still flowing into bonds. So while we are seeing a good amount of fear in the markets, but the fear is diminishing slightly as referenced by the US dollar and by gold, you're not seeing that in bonds. Money's rotating into bonds. So what gives here? The tips, Treasury inflation protected securities. Tips are ripping through the ceiling. We moved up nearly 1.75% today. That's a massive move. But the question is why? What's going on here? Isn't the Fed supposed to cut rates? Isn't their bond buying supposed to stop very, very soon? Look no further than the yield curve. The yield curve, which is an indicator that we use, and most of professionals in finance use the yield curve to measure as to whether or not we're going into a recession. And we are dropping like a rock. And once we invert, it's not soon thereafter that we find ourselves in a recessionary environment. So the last time was right before COVID. and we know how that ended. Before that, the financial crisis, we know how that ended. Before that, the dot-com bubble, we know how that ended. This is screaming danger. What else am I concerned about? I'm going to go right to the banks. The daily chart is not horrible. We didn't close up today. I mean, you had the S&P 500 close down about a quarter percentage point. Technology was up just shy of a third of a percentage point. Now, when you take a look at the banks underperformed. You had the S&P 500, which yes, closed down, but you had SEC closed up. So while this is not an ugly chart, it's not the one I'm really basing my concern on. It's more so the weekly chart. We'll go to that in a moment. So why did the banks close down today? Probably because of not just yields, but because we have a huge question mark in the financial sector. Who has the counterparty risk to Russia? Are there any derivatives that could get triggered? Swaps, whatever the heck is out there. These weapons of financial mass destruction, as Warren Buffett likes to call them. Nobody knows. So while this is not a horrible chart, what concerns me is the weekly chart. The weekly chart, take a look at the deterioration of momentum on the stochastics, or should I say the increase in the momentum to the downside. RSI now trading down below 50. So if we continue to see bond yields deteriorate and the yield curve continue to collapse, as I just showed you, that's not going to bode well for the banks. Because what I think the banks are pricing in, besides Russia, is that the Federal Reserve has what they want. They have their excuse not to be very aggressive. It's all about Russia, SWIFT, sanctions, the unknown. We're going to be very deliberate here, blah, 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 blah. We've heard it time and time again. Now, looking at the VIX, it closed up today, over 9%. The Dow Transports closed up on good volume at resistance. Now, let's take a look at the S&P 500 on a monthly time frame to see how we closed out the month. Stokes are rolling over. RSI rolling over. Yeah, sure, we rallied off the lows of the month. I'm not loving this at all, man. MACD looks as though it's going to go negative either this month or next. Beware these counter trend rallies, folks. Let's move on and talk about positions. Actually, before we do, let's talk about gold. Gold closed up today, but well off of its highs. It managed to close above 1900. We're up on volume. What are our Stokes doing? They're rolling over. So we may go into a brief corrective phase here on gold. This is a lot of topping action. Moving on to, we went over NUGT already at the beginning. Talk about GDXJ, an up day. We're holding on to support. Stokes are rolling over. The up volume declined dramatically. We were very light on Friday, and today came in considerably lower. So beware of these gold mining stocks. Beware of gold. Let's take a look at silver. Silver had a very good day today. Closed up on volume. Stokes are rolling over, though. The silver miners up on the day. Volume was good. Stokes are rolling over. They need to flatten out and hook up, because if they don't, we know what happens. If they proceed lower and they begin to close down below the neutral line at 50, rallies tend to fade. Gold money, nice move apart today. Nearly 3% on the day. Good move. That's a breakout. Cal-Maine Foods, up a quarter percentage point. A little bit of topping tails here. Volume is declining. Stokes are beginning to roll over. You're getting lower highs. So if you're an investor in Cal-Maine Foods, if you're an investor in the gold mining stocks, well, you're not going to worry about the short-term gyrations. If you're a swing trader, you may want to tighten up your stops here and look to exit the trade. LABU weekly chart. I pull up the weekly chart first because I just want to see how we opened up the week. And you could see that we're already forming some topping action right at 1723. But the Stokes are beginning to hook up here. We are short of the 16 puts expiring this Friday. That would be the 4th. Let's go to a daily chart. RSI daily time frame has broken out. Stokes rising, good stuff. Got a bit of resistance up here at 1750. I said 1723 earlier, in that ballpark. Volume is good. It's under accumulation. So we'll stay, in essence, long of LABU vis-a-vis staying short of the puts. I want to talk a little bit about Palo Alto Networks. We're going to look to sell puts here. I'm bullish on it. I just can't buy it right now. It's way too extended. We're probably going to tumble. Strong accumulation. This is a play on the new Cold War. And I'm also thinking about shorting the banks using naked put options. Excuse me, naked call options. I initially had expected to come on here. This is a weekly chart. I expected to come on here saying we'll open up a strangle on the banks, but if they go, I don't want to be the bag holder down at a break below 104 per share. We would probably have to go out 35, 40 days, maybe even 45 days to get a decent price at the 80 strike if we wanted to put on a strangle. I really want to go far away from the closing price action of tonight so we have a good distance away just in case the banks break. And with that, folks, everybody have a great night. I will talk to you tomorrow. Be well.